Would also be great to get the team's perspective on ophthalmology. So if we could get some broader market commentary from the provider services teams, that'd be great.
So ophthalmology is interesting in that it's leading the charge when we speak about pent up supply. And that's led by private equity investment. So when you look at fund lives and investment horizons, there was a lot of activity in 16, 17, and 18 in assets that should have traded in 2023. So timing in terms of coming to market is going to be big for the next 9 months. But what that is culminating in is in a temporary depression of valuation in ophthalmology until some of these larger platforms reset. And by reset, it's trading from fund to fund at a higher valuation, just giving more room for the entire market to benefit from accretive valuation multiples. So if you look at other sectors where the roll-up strategies have been more mature in terms of just time on task, ophthalmology has this unique paradigm where there are just not an abundance of larger players to do the larger deals. So you've seen somewhat of a donut hole in activity of, call it the 5 to 15 of EBITDA. There's not a lot of buyers not a lot of strategic buyers for the 15, 20, 30, $40 million EBITDA platforms. So those will have to come from trading sponsor to sponsor. So our view is that once those occur that are more dependent on the debt financing markets, so into 2024, that will trickle down back to historically, high valuations, which ophthalmology has enjoyed. The sector was on the verge of being just, in terms of volume and value, to be getting to the top end for retail medicine. And we've seen in the past year kind of a slowdown in both activity and valuation. But still, some of the core tenets of value that folks are looking for is an integrated model, ODMD, surgery center focused, single specialty surgical facilities. So there's a lot. Our team at BGL has done a lot on the real estate side as well, on within eye care broadly speaking. And so it'll be interesting. Never a dull moment. But frankly, ophthalmology is a sector in retail medicine that we cover very closely, that we've seen a temporary downtick in valuation. Kevin will be interested to hear your thoughts from the VMG side.
Yeah, you bet. Yeah, we've been involved, with several of the prominent platforms out there that are making acquisitions and really assisting them. Some in two predominant areas, really, from both a quality of earnings perspective on the front end of deals, and then from a post-transaction perspective, doing valuation work for financial reporting purposes after the fact. We have started to get more involved too on personal goodwill. We have seen a number of some of these platforms, some of these targets, anyways, that are structured as C corps and are potentially subject to double taxation in the event of transactions. And from a more creative kind of deal structure of assigning greater value to personal goodwill, has an opportunity to make it a little bit more of a tax advantageous transaction. But I agree, the groups that we're dealing with are not behemoths. You've got almost a fragmentation of these platforms, in that you've got a lot of these platforms and none of which have considerable dominant size. So as we look going forward, will we see consolidation that occurs amongst these platforms? I think you could. You also have had potential consolidation occurring as it relates to the more retail focus versus, i.e. there, like your OD components compared to maybe your more traditional ophthalmology based, or even what we've seen is more emerging here, and you really have one large provider being in the retina field. That was Retina Consultants of America. They have been highly acquisitive in large groups. When you're talking about retina groups that are largely kind of aggregated into fairly large, where you have many of which are 10 to 20 physicians plus. And so, could you see some kind of vertical integration there and consolidation within the ophthalmology field? I think you certainly could. And then again, lastly, on the ancillary front there too, most of these have their own single specialty ASCs, some of which are multi-specialty ASCs, but then you still have the same challenge of buyers out there of how do they unlock that potential value, because that's really the kind of the predominant value, especially for ophthalmology on the ancillary front, is in their surgical practices. So we'll see. I know again from an ASC front there is concern as you start to see the potential to have cataracts move back in office. That certainly could kind of change the paradigm a little bit and potentially allow some of these groups to realize more value than they had in the past through capturing more of that ancillary income stream.
Well, appreciate that commentary as relates to ophthalmology. I think more in general on the corporate side, as we think about this from a real estate perspective, a lot of the fundamentals of that type of practice really drive through to valuation and activity within the real estate side as well. Having single specialty ASCs, oftentimes you'll see those single specialty ASCs kind of commingled with the clinic operations of an ophthalmology practice as well, and then the integration of the MDs and ODs kind of provides for a pretty unique profile, I think, from an investor perspective, namely because typically you'll get a lot more in terms of coverage, in terms of cash flow from the ASC, just given the technical fees that are driven from those operations. But then thinking over to the clinic operations of that, right? There are a lot of ancillaries that are involved there, particularly when you're talking about ODs, having optometrists in office who are largely driving higher volume of patient visits. And then separately, you have the retail component as well, which provides a bit of cushion. And so really in general, I think that when you're looking at assets like this, these are very attractive because you have complementary sides of the business, oftentimes within one facility, and then separately you just have multiple streams of cash flows that really reduce any risk of variability within kind of the profits of those specific practices. So which all of which make those very attractive for investors, and then obviously it kind of goes to the specialization of the facilities as well. Any tenant improvements, any modifications required to the property, especially as you kind of work your way up the acuity chain within the outpatient setting, that just creates a certain stickiness, within the facility as pertains to, making sure that you're, keeping a practice within a facility, for the long term, right? It requires significant investment, and, having some skin in the game, from the tenant perspective is always going to be attractive to a real estate investor. Victor, it'd be great to hear your comments on that as well.
Thanks, Sean. Yeah, I'll touch on a specific issue that I see more frequently with ophthalmology deals than some of the other specialties we've talked about. With all the specialties we've talked about, there's a lot of times VMG's involvement on the real estate side will involve determining a fair market value lease rate for Stark law or any kickback compliance. And with ophthalmology, in a lot of cases, there will be a practice that will have satellite locations where they're going a day or a half day a week, what we'll call a timeshare or part-time occupancy arrangement. And I've seen particular deals where that was a major roadblock to be worked through because the practice had sometimes informal agreements with various physicians scattered around the state, other ophthalmologists, they come in and use the space. Because ophthalmologists use high dollar equipment, you might be coming in for a half day and using OCT systems or retinal cameras or fundus cameras or slit lamps or these things that are expensive. And so if you're paying for a half day block of use where you're paying for use of the space, use of the equipment, and a lot of times landlord provided staffing, a receptionist or perhaps a nurse that all need to be accounted for in that block rate. In some of these physician to physician deals that have been maybe negotiated and structured more informally that are then being acquired by either a system or a PE platform that needs to ensure that those payments are at fair market value, you have to quickly determine whether they are in fair market value or determine or adjust them during the transaction. And those timeshare arrangements are quite common in ophthalmology and is a kind of a unique transaction issue to think about as someone proceeds through